This is AO Accounting Academy. Today I'll be discussing balancing of accounts and the trial balance as a topic. Balancing of account and the trial balance. So let me just put the topic here. So, balancing of accounts and the trial balance. So if you remember the last time we had our session, we discussed rules of double entry principle, debit receiver, credit giver. For every debit entry there must be a corresponding credit entry. So we discussed in detail, but while discussing and we prepare the different ledger accounts from a sample question that we had, so we did not balance all those accounts. So um, the purpose of this lecture today is to discuss how we balance all these accounts and prepare what we call a trial balance. So before we do that, so let me just put a simple note here. What is a trial balance? What is a trial balance? So what is a trial balance? To me, trial balance is the list of all balances of ledger accounts of all balances of individual, let me use that word, individual ledger accounts. So these balances is required for us to be able to prepare our statement of financial position or statement of profit or loss. So for us to prepare a trial balance, we need the respective balances of each ledger account. That's what I said. They said list of all balances of individual ledger account. This is a ledger account. This is a ledger account. I took this from the last example we did. So don't worry if you are not familiar with the figures. So this is a ledger account. This individual account is a ledger account. So what we need to do now is for us to prepare this trial balance. First we need to have a pro forma. So let me just put a pro forma here. A pro forma statement of trial balance. So in this pro forma statement of trial balance, we have what we call two columns, which is debit column and the credit column. So ledger account. So we have this ledger account here. We have debit column, we have credit column. So in this question that we already have respective ledger accounts. It might not be the same ledger account, but this account identify all aspects of what we call a statement of profit or loss or statement of financial position. A statement of profit or loss is expected to have items like sales, we have purchases, sales, purchases, can be maybe other income, depending on what we have. But for the purpose of this discussion, I think we have only sales and purchases as it affects statement of profit or loss. And in the balance sheet, we can have the first account we have is the cash account. Cash account. Do we have a bank account? Yes, bank account. What's the next one? We have a capital account here. But I would not want to put that now. I'll go down and do others. We have building and we have furniture. So these are fixed asset accounts. So we can just list them for the purpose of this discussion. We'll not be differentiating between maybe a fixed asset or a current asset. So I'll just put it there that with buildings, we have furniture, building furniture, we have sales, we have recorded bank. Now we have ABC Limited. So if you see here, ABC Limited, the balance on this is showing a transaction on the debit side. So that transaction on the debit side shows that we sold to ABC Limited. So ABC Limited, I can say, is a debtor account. Let me use that word, debtor or account receivable, whatever. Accounts receivable. So the other one is Assets Limited, which shows that the company sold goods to us. So we purchase goods worth 200,000. So it's a accounts payable. So that's that. So we can say we have account receivable, and we have account payable. So after the account payable, the last one but not the least is the capital account I didn't mention that time. So we can call it capital account or share capital account. Depends on how the capital was sourced for the business. So um, we have so yeah, the first thing we now need to do after we must have created our pro forma, uh, we now go back and start balancing of all those accounts that we have. So if you look at it very well, we have transactions on the debit side and also on the credit side. So on the debit side of a cash account, we have $1 million, and on the credit side, when we have it together, I think it's not up to $1 million. So we can sum it and say sum. Yeah, let's use this. Yeah, so we use the same here. Yeah. So if you do a sum here, this account is 1 million. So what you do is you compare both sides. If you look at this side, when you add these two together, it is 450,000. So you don't put the 450,000 here. You put the balance that is much on the side. Like this debit side is much more than the credit side. So the balance that is more is what you put in this box here. So you put the same thing in the box for both of them. Then there's a difference between what we have as the total balance and what we have on those two transactions. So we can say these ones are called balance carried down. We call it CD. Balance carried down is you now take this minus sum of this two. So what you have is 550,000. That's a balance. So that balance on that side is called the balance carried down. Now this one is balance brought down, or let me say brought forward. It's the same amount that will come to this side. So you have balance of that cash account. So let's go to capital account. So on the capital account, we have only transactions on the credit side. We can sum it like we used to do. Put this the same, put the same value. Yeah, but here there's no other thing. So what you do is just to see balance carried down because there are no transactions. So it's the same balance of 11 million naira. 11 million dollars, sorry. Format printer. Yeah. So that's the balance here. So, and that balance on this side will now be balance brought forward, like I said earlier on. So the same value will come here. So balance of the cash account. So let's go to building account. Is there any transaction? We have only transaction in one side, which is on the debit side, and we do the same on the credit side, and the balance will be $10 million. $10 million. Then your balance carried down will be here. Don't forget what we said, because that side is the lower of the sides. Balance carried down will be the same, 10 million. So, and the balance brought forward, let me copy this, paste here, is the same $10 million. So then we balance our cash, our furniture account. Our furniture account shows $200,000. So yeah. So so same value will be here. I'll have our balance carried down, balance CD, the same 200,000. Then we have balance brought forward. So the same value of 200,000 will come down. So the next one, we have 4 or 5 different accounts to balance. So let's give it a space here. So we'll do the same, just the same approach for all accounts. This one has the eye of the figures, 680. This one doesn't have anything. So this. So the same value will come here, and our balance carried down will be on this side. So the same approach. Balance CD. And our balance brought forward will be on this side. BF. So the same thing we do for cash, for bank account. Auto sum this. A bank account is this. Same thing. Don't forget what I told you. So then we have the same figure here. Then our balance carried down will be here, because that side is the lower of the side. The same value. Our balance brought forward will be here. Balance brought forward. The same value, 750,000. So there are 3 other accounts. So let me start. So this one, let me say, is the same. Auto sum, yeah. So our balance carried down will be here. CD, yeah, the same value. balance brought forward, balance BF. Yeah, the same thing. Do for purchase account, summit, purchases, summit equals to this. Our balance carried down be here. Just copy this to see, paste same value, because there are no other balances to compare with. Balance BF. So, and the last but not the least is the accounts payable. Account payable to some. Yeah, this one will be here. Insert one more line here. So we have our balance carried down. Balance CD is also the same value, and balance brought forward BF will be on this side. So now that we have balanced all accounts, we ensure that we balance all the accounts in those ledger accounts. So we now start putting those balance carried down. If you look at the balance carried down here, is on this credit side, and balance brought forward is on this debit side. So what we do is, because these accounts are designed, and don't forget the rule of double entry, like a cash account is an asset account, it will always have a debit balance. So if a cash account is having a credit balance, then it means it's overdrawn. So we need to be careful of that. So always ensure that when you balance off rightly, and once you make a mistake, you start seeing it. So like the cash account is having a balance brought forward on the debit side. So that is what is important to us. So that debit side cash account, where is the cash account? This is a cash account. Just link it. Balance brought forward. Where's, yeah, 550. So which account is the next account on the side? Is the capital account, and that capital account shows on the credit side. So capital account. So let me put borders so that we can see. So our capital account is on the credit side. So the balance brought forward is what you should watch out for. So it's on the credit side. We put it on the credit side. So what's the next account that we have? After the capital account, we have buildings. Buildings shows on the debit side. Yeah, buildings. Locate buildings. Yeah, this is buildings on the debit side. This is buildings. Then we have furniture. Furniture is also on the debit side, as I can see there. Furniture on the debit side. Which other account? You have sales accounts on the credit side. Don't forget we said credit, debit, purchases, and credit sales. So that's what you're saying. Sales on the credit side. All this follows our rules of double entry. And the next account besides sales is a bank account. Bank account, yeah. Bank account is on the debit side. So the next account after the bank account is the account receivable. Account receivable should be on the debit side. If not, then there's a problem. You need to investigate. So then purchases is on the debit side also. Debit purchases and credit sales. So, and the last but not the least is the accounts payable, which is on the credit side. Accounts payable. So when you now do a sum total of those balances on those accounts, individual ledger account, when you sum it, it should equal. If it's not equal, then it means there's a problem. So those accounts should equal at every point in time. So now you see it's equal. If there's a problem, then it might be one of these errors, errors that can occur. Let me say errors that may occur. It will be one, maybe transposition error. Number two, maybe error of omission. Omission. Error of reclassification. So it can be any of these three errors, but for the purpose of this discussion, we'll not go deep into each of these errors so that we can explain them. But if any of these occur, there's also a way of finding out those errors and correcting them. So thank you so much. Thank you. Bye.